We need to talk about Nvidia's earnings. How about the Fed minutes? We can also talk about some data that we've collected from John Burns Real Estate Consulting as well as Resi Club. What is Deutsche Bank saying? That is something I think we should start to consider. But before we do that, let's do two announcements. First, let's wish a very happy birthday to Joshua. Joshua and Melody got their first deal after looking for a long time. Joshua, your wife sent me a nice note documenting the entire journey that the two of you went on to get your first great deal. And I both wanted to say congratulations and happy birthday, Joshua. Joshua and Melody, congrats on your first deal. Not to be outdone, Joanna, you got your next deal. I would like to congratulate you as well. Alrighty, folks, yesterday I proposed an idea to potentially sell tickets early to 2025. I didn't feel good about it. I still don't feel good about it. We're not going to do it. Why are we not going to sell it early even though there is a lot of demand? Well, in my head, if you came to the event over last weekend, you probably spent a couple of $1,000s. And to have you potentially sign up for hundreds of dollars again just doesn't feel like the right thing to do. It just doesn't feel like the right thing to do. I will certainly be working on the event. We will likely start it somewhere between July and August, either my birthday or my daughter's birthday. But we will sell. It would be nice to capitalize, I guess, on the energy that we all have, but it just doesn't feel like the right move. So we're not going to do it. So no sale, no pre-sale, no nothing. Nothing will happen. We will talk about ORAT 25, I don't know, mid-July, early August, something like that. So thank you for all your notes. Thank you for your feedback. It just doesn't feel right to me. So we're not going to do it. There we go. All right, we'll move on from that. Let's get into it. Let's talk about Nvidia first. Man, Nvidia revenue up 265%. They beat top line, they beat bottom line, and they raised guidance. Yeah. To say that Nvidia killed it is an understatement. It'll be interesting to see where Nvidia stock is going as I'm now in my Mountain View office, which means I've had to drive, so I don't know what's going on in the market. But yeah, Nvidia crushed it. Be curious to see what other stocks rise with Nvidia. Yesterday, obviously, Palo Alto Networks, I think, had a pretty down day. Again, lowering expectations. So it'll be interesting, the tug and pull of artificial intelligence and cybersecurity. We will see where other software companies go. How about the Fed minutes? What are the Fed minutes telling us? Well, the Fed minutes are telling us not really anything we didn't know. Fed minutes are cautious about lowering rates too early. They've identified risks of moving too quickly, a la probably the 70s. They did talk about commercial real estate. We have to watch this, commercial real estate. Price declines have continued, especially in multifamily and office. This is important. I don't think a lot of people pick this line up. Low transactions. Now, why would the Fed potentially talk about low transactions? This is my guess. This is me reading between the lines. Low transactions means we have not had price discovery. What does that mean? Well, if you're operating in a world where there used to be 100 transactions and suddenly there's 13, you really don't have price discovery. The market is not behaving currently or not behaving as normal. So what does that possibly mean? Well, watch out below. Prices are going to be going down. But here is the deal. I don't think it's unreasonable. Let's be clear. I don't want this to happen, but what I want, they don't ask. Nobody's asking me what I want from the Fed. It would not be unreasonable at some time in the next 18 to 24 months, the Fed does something similar to that they did with the 10-year treasuries, where they allow the banks to pledge them at 100%, or AKA face value. I think there will be a difference. I think there was so much anger, and rightly so, last time about the people who caused the Great Recession profiting, that it would not shock me if the equity is wiped out. So they'll take the debt, which is at, call it 65%, make that money good, but they take the equity and turn it to zero. It just feels like there's some commercial real estate, I don't know what else to call it, but bailout possibly in the offering. Again, I don't want it to happen. I want the clearing system. I want the pain to happen. But again, nobody asks me my opinion. Folks, I don't know if you saw this, but the Japanese Nikkei index finally recovered from their 35-year drop. Yes, folks, 35 years peak to peak. That is, think about that. You're a 30-year-old young engineer. You're now 65. Yeah, that's how long that if you don't really tackle the problem or the root cause, that something could go down. It is Thursday, so we got to talk about weekly unemployment claims. Remember, folks, all the doomers out there talking about what's going on in the job market. Well, it's not showing up in the weekly data yet. So again, we'll go over three numbers: last, expectations, and actuals. Last week was 212,000. Expectations were 217, so they expected it to go up. Reality, drum roll please, 201. Came in at 201, so came in below expectations. Now for some data from Resi Club and John Burns. We'll do John Burns first. John Burns has went out and collected a lot of information about multifamily. John Burns Real Estate Consulting is starting to sound like Ken McElroy. What do I mean by that? John Burns is basically saying, yes, we have a lot of deliveries coming in 2024 and 2025, but it's going to be sparse thereafter. John Burns went out and collected data on where the deliveries are going. I decided to write down the top 6. You tell me if you see any trends. All right? Number 1, Dallas, Texas, with over 55,000 deliveries coming. Number 2, New York. I thought you couldn't build in New York. Clearly, I was wrong. New York coming on strong with 53,000. Phoenix, 51,000. Austin, Texas, 42,000. I call it 43,000. Newark, 38,000. And Atlanta, 34,000. So again, what do I take from this top 6 list? Really tier 1 cities is my first thought. Number 2, Sun Belt and New York. Number 3, no California. No California. It is hard to build in California. So according to John Burns Real Estate Consulting, one might be smart, might be intelligent to look at tier 2 cities or tertiary markets, which I think is very, very interesting. How about Resi Club? Resi Club Analytics. If you're not getting the daily emails, you're really missing out. Talking about baby boomers and Gen X and how long they are staying in homes. This is important. I believe this is changing right now. Historically speaking, people stay in their homes collectively about 8 years. Right now, according to Resi Club and Lance Lambert, 40%, 4 out of 10. This is mind-blowing to me. This is mind-blowing. 4 out of 10 baby boomers, or 2 out of 5, have lived in their house 20 years or more. This is especially true in states like California. Most of you probably don't know. Most of you don't know that One of the perks of California real estate is a proposition that we generally call Prop 13. Prop 13 basically takes your purchase price and then allows taxes to go up only like 1 or 2% or something. So that's how you can have a teacher buy a house in, say, Palo Alto, California for 50 grand, stay in their house for 40 years, and now it's worth $7 million because property taxes, unlike Texas, doesn't reset to value. So this might be one of the reasons you're seeing baby boomers in the states of California stay put, because they can't afford to leave. They can't afford to leave. Not to be outdone, 16% of baby boomers have lived in their home 10 to 19 years. So 56 of baby boomers have been in their home over 10 years. How about Gen X? Gen X happens to be the age group that I fall in. Turns out 35% of us, and I am in this category, 35% of us have lived in our home 10 years or more. So again, folks, one of the things that we are going to have to watch. Again, one of my anchors or my thesis is the Fed broke the housing market. This is going to show up over years. The churn or turn rate is going to fall. It would not shock me. It would not shock me if the average of 8 years goes up 50%. What does that mean? It means we could get to 12 years, 13 years. It is going to be that sticky, in my opinion. How about Deutsche Bank? Deutsche Bank out with an interesting analysis. Wasn't Deutsche Bank the one that said we're going to have 9 rate cuts? It was some bank in Europe. It may not have been Deutsche Bank, but it was a European bank. Maybe it was UBS. I think it was UBS. Anyways, I digress. Deutsche Bank economists saying it is possible we have 0 rate cuts in 2024. 0 rate cuts in 2024. Again, basically growth is ahead of schedule, job market maintaining strong. Why the heck would the Fed cut? I think that is a reasonable question. All right, a couple other things I thought I would talk about. Oh, how about FHA? Man, the doomers and crash bros can't catch a break. They just can't catch a break. Oh my goodness. FHA, I had to check this source because I honestly didn't think it was true, but apparently this is true. FHA extends the full suite of COVID-era loss mitigation options. The full suite. And announces a new program. In this new program, if you get behind, there's a program called Payment Supplement that will immediately slash your payments 25%. So why is this important? In order to have the setup for a real crash, we need inventory to stack up. And one of the ways you can have inventory stack up is you have distressed sales. One of the things about distressed sales I keep harping on these crash bros about is it takes years to build. In the last cycle, it took 1,000 days. And just in case you're bad at math, that's over 2 years. So, if they've just extended COVID era complete package of loss mitigation to April 30th of 2025, that means the pain wouldn't build until at least 2027. So if you are a crash bro and your thesis is we are going to get foreclosures and short sales this year, you need to understand math. And you need to understand extend and pretend. Wild. How about lastly, we'll close with Bank of America CEO Brian Moynihan. He is out on CNBC talking about you and I getting used to 6 and 7% mortgage rates. 6 and 7% mortgage rates. I frankly, as I said yesterday or the day before, hope so. I hope we stay at 7% mortgage rates. You and I, if you watch this channel, you and I know what happened when rates went to 6.5. The market got stupid. We don't need a stupid housing market. That could lead to very, very bad things. Let's stick the mortgage rate 7% flat. If you want to buy it down to 6.5, go nuts. Let's just do that for 6 months. Can we do that for 6 months? And let's just slow down, take a breath, build a foundation. I don't want this. We don't need more of that. Alrighty, folks, again, let's welcome or congratulate Joshua and Melody on getting their first deal. Joshua, happy birthday. Melody, very nice touch sending me a note. And Joanna, congratulations on your next deal. It actually might be Jonah. I don't know. I don't read well. Jonah might be Jonah. I apologize if I got it wrong. I guess now I got it wrong because it's either Joanna or Jonah, and I said them both. So clearly I'm wrong one way. Hopefully I got it right. Like, subscribe, comment. Remember, we are not selling tickets for 2025. We will do that in the summer. You have an amazing day. Take care of yourself. Bye.